Why are VA loans the best loans on the market?
When you're comparing even a conventional loan to a VA loan, they are 4% more likely to approve. They actually have a lower default rate. They have a lower foreclosure rate.
How do you know if your loan officer specializes in VA loans?
There's a few questions I typically tell people to ask, and it's asking them questions about the funding fee. How many loans have you closed? Like just this year. How many have you done last year? What is your success rate on those VA loans?
What about closing costs, though? Are there certain closing costs that the veteran is not allowed to pay?
So,
in life, there's a blueprint for everything. There's no need to start over. Hear from industry leaders, those at the top of their fitness journey, and real estate gurus. They tell you exactly how they did it. All you have to do is listen, learn, and execute. This is The Blueprint with Brad Rice.
All right, everybody, welcome back to The Blueprint. And today we have another special edition of the Loan Officer Spotlight. This is where we bring in people from my mortgage company, from Amerifund Home Loans, to come and talk about their why, talk about what they're specializing in, and how they're really benefiting home buyers out there with their mortgages. And so today I have a special welcome to Jerry Avila. Thanks for coming and joining me. Now, Jerry, this wasn't a far trip for you. We had Tammy in here a few weeks ago, and she flew out from across the states.
Yeah.
You drove down a couple hours. But I will say, on our meeting this morning, you were feeling a little under the weather, and I said, let's get here anyway. I like to test my immunity. So.
And we're good. We're good. It turns out it's just allergies. I'm going to be fine.
We're good. Anyway, man, this is my first time meeting you in person. Always seeing you online, always communicating on Teams and that sort of thing, Microsoft Teams. But I didn't realize, Jamie, my business partner, you guys have met in person many times.
Yes.
So it was kind of cool to see you guys reconnect today. Anyway, hey, thanks for taking the trip down. There's so much I want to cover today with you. You have been just a whirlwind after joining us. And I mean that in a very good way. You joined us and immediately had impact. You immediately got into the culture. You immediately jumped in to help people out. You didn't even know our systems, and you're jumping in and giving advice to people. And so you've got this really great depth of experience in mortgages, and especially VA mortgages, which I want to talk about. But you're also a really giving, altruistic person. And so I want to get into a bit of that with you. Sure. But let's start with Jerry. How did Jerry get into the mortgage business? Where did you start, and what was the transition to finally get into originating loans?
So I was working as basically customer service for an insurance company way back when, not too far from here, Anthem Blue Cross, right? I worked for them, working in the senior department. So I was always very keen on listening, because you have to listen to the elderly because they take their time answering questions, and so all that good stuff. And so I ended up having to be cut back on at that organization. And so I was like, well, man, shoot, my sister, I had helped her get into banking, so I was like, you know what, maybe I'll go work for a bank. Countrywide appeared. I ended up putting in my application, ended up getting hired. I was coming in to be a loan officer, I was going to be a loan officer in training. Next thing I know, the market falls apart.
So this was pre-2008?
Yeah, 2005.
It was 2005. And by the way, Countrywide, back then, this was their hub near us here. So what location were you at?
Literally down the street.
Up on the hill here?
Yeah.
Oh, okay. So it was one of the main locations.
It was the main office.
Yep.
Yeah.
Yep.
So I ended up coming into work there, and essentially I was supposed to be a loan officer, but immediately got turned around in 2000. So September-ish of 2005 to early parts of 2006, all of a sudden they started revamping everything. Full spectrum lending was kind of going away. You started seeing all the trickling effects of the market falling apart.
Yep.
And so that is when I was starting to be moved from collections to short sale deed in lieu, modifications, all that stuff. And then eventually we just did all of it in one, as one hub versus everyone having their own segments. Right? Before it used to be segmented out, certain people did certain things. And so I went from department to department to then eventually when they just expanded it all. to encompass everything. And during that time frame, I got to have the opportunity to help some families, but also see some families kind of just shoot off, right?
Yeah.
And
Like shoved under the carpet, like,
absolutely,
they weren't
and,
getting any answers and they were frustrated. Yep.
yeah. And so those were the ones that for me resonated the most because it was sad, but one of them that really always stuck to me, no matter what I was doing in life, was an experience that I had with a veteran spouse who he was killed in action. And unfortunately, the bank didn't really do their part on taking in consideration all the avenues, like everything that needed to be done. Somebody told her the incorrect thing to do and put her in default. And then after that, it was like, well, no, here, like, let's rectify that. Like, I'm gonna walk you through it. I'm gonna guide you to exactly what you need to do. She did everything, but then it came back that they were like, well, according to our agreements, our servicing agreements, we don't have to do this, and they didn't do it. Unfortunately, the veteran spouse, she lost the home, and even then, for whatever reason, she felt the need to find out who I was, where I was located. Spoke to my manager. I guess my manager kind of let her know we were in what location, and then she shipped me like this big old basket with stuff, and I was just like in awe of that because it's like, well, dude, like I didn't do anything to help you, like seriously, like I might have gone out of my way to make sure that you got taken care of, but you didn't. So why be thankful for that?
Sure.
And at the end, that's really what kind of sent me in that direction, where that's the reason why I love what I do, because it's like I got a chance to really help somebody even though I didn't do it.
Yeah.
I wasn't successful in, or at least my point of view in being successful, but I took care of her, and I think she felt that.
Well, I think that experience, I mean, just knowing who you are now and the impact you've had in being a mentor to several people in the company. So even though you're new with us, you've got people that are already latching onto you and your knowledge, and you're helping them out. I think that's a testament to that, to what you learned through that experience and helping people. How did that? So obviously you're on the back end of the business at that point. When did you find out about or learn about becoming a loan officer and make that transition?
So when I ended up getting let go at Bank of America, they kept doing cutbacks. I mean, obviously that part of the department wasn't going to last forever, right? The market was steadying out. It was 2013. And then I ended up getting laid off. And so I was like, you know what? I'll be home for a year. I'm going to get paid, so I might as well.
You had a year severance.
Year severance,
Isn't
yeah.
that
Because
something?
I had been there for a minute. So
Okay.
it was like 11 months of severance. So it was not bad. And then I was getting unemployment. My child had just been born, my second child. So when Ellie was born, I was literally just sitting at home and taking care of her, going to the gym, coming back home, working with the kids. I was happy. I was like, you know what, shoot, like I'll dabble back into it. Yeah, so I was like, I'll dabble back into it a little bit. I was getting right around month 10, and I was like, you know what, I need to like start putting feelers out again. Otherwise, I'm gonna run out of time. And I just so happened to have applied in like 4 different places. 2 of them called me back, and they were gonna have me come back for a second interview. And then I get a call from the broker owner or co-broker owner at that time of Capital Mortgage Services, which is Marty Smith. His assistant, Candace, or office admin, Candace, she ended up calling me in. Her assistant, Sarah, his assistant, Sarah, came in and actually spoke to both of us. And, she was from Countrywide before too. There was a lot of correlation there. And I will tell you that I think my biggest motivator to make sure that I was in this industry was probably his words to me, because he basically said, he's all like, well, everyone seems to love you, so I think we'll go ahead and extend the offer to employ you. I was only going to be a loan officer assistant, right? And with hopes of like, you know what, maybe I'll dabble back into the broker part. And next thing I know, he throws out some words that I said, oh, okay, challenge accepted, which was people that usually come from your line of the business don't make it on this side. And I said, okay, challenge accepted. I literally
Yeah.
just looked him right in the face and said, I thank you for saying that because I'm going to prove you wrong. Like I'm going to prove you wrong. I'm like, we'll see who's right at the end of this. And I was only his assistant, maybe I think a year.
Okay.
And then I told him, I'm like, hey dude, what do I need to do to become a loan officer? Like, cause I know things have changed, right? Cause back in 2005, you didn't have to get
Sure.
NMLS and all that stuff. So he told me, he's like, well, in order to work with us, got to get your BRE and make sure that once you get that, then we get you into your mortgage licensing and we'll go from there.
Yeah.
I was like, all right, cool.
Okay.
Immediately, right as I'm working his files, I'm doing both at the same
This is
time.
about 2010-ish?
So I came on with them 2014-ish.
Oh, okay. All right.
And then by 2016, I was going through all the, well, no, it was 2015 when I finally joined them. But 2016 is when I started the whole coursework and all that stuff. At the end of 2016, 2017, somewhere around there, I officially got all my licenses, got everything done, and immediately just jumped in.
Got it. All right. So, so now you have your mortgage license. You had this experience with this veteran spouse that had an impact on you. And then somewhere along the line, you decided to create focus on VA loans.
Yeah.
How did that happen?
So I was trying to just get my foot in the door, but always remembering, like I have family that are all serving, right? So I have cousins and uncles and just all over the spectrum, Navy, Air Force, like they're in different, different branches. But at the end of it all, it was that one instance with that veteran spouse that kept making me feel like, you know what, like I need to help more of them because I really felt like I actually had an impact in that situation, even though I didn't necessarily accomplish the goal.
Sure.
And I felt like that was probably the biggest, I would say, like defining moment for me.
Sure.
So it always goes back to that. And
but you could do any type of loan,
I can,
but somehow you dug into learning VA loans.
Yes, and which is part of the reason why I know somebody who's here with us, which is Leroy Romero.
Yep.
Right. Him and I mean, I think it was so hilarious because it was like the first time we met, it was like we already started talking about we were the Oompa Loompas, right? Because we're the both shortest people in the room and, small Latinos basically. So we were like, we're the Oompa Loompas of the crew over here.
Oh my gosh, that's funny.
And for years, we just chatted. And I just try to learn as much as I could from everybody. There's people out there from the old MMBC, which is Military Mortgage Boot Camp. I know forever now. There's mainly focusing now, I would say, is Vetted VA because of my focus in Vetted VA. It's really allowed me to like really feel like that sense of like, oh shoot, I actually knew that answer.
So explain to everybody what Vetted VA is. Are you a tech investor looking to shape the future of real estate? HomePie is the #1 for sale by owner marketplace, and we are revolutionizing the way homes are bought and sold. I'd love to hear from you. Just email invest@homepie.com and let's chat. Now back to the show. So explain to everybody what Vetted VA is.
So Vetted VA is an organization that's founded in Facebook. And what it is that we're just there to answer questions for the veteran community, right? We don't solicit you. We won't ask you like, hey, you know what? Well, what state are you in? Because then I can help you, right? Like there's no solicitation allowed whatsoever. Even the inference of saying that we're going to help you, like that in itself is a no-no.
Okay.
So we really do focus in on just making sure that the veteran consumer knows and understands that we are there to answer their questions and nothing more.
So it's a community based in Facebook that helps answer questions on VA loans for veterans.
Correct.
Interesting. Okay.
Yeah.
And so you and Leroy are both part of that.
Correct.
And I understand there's different levels to it.
Yes, and both of us share the same rank. So it basically starts your VVA all the way up to VVA 5. Leroy and myself actually are part of the first 13 moderators of the group in history. So it goes back now, I think it's 5 years. Mm-hmm. We're about to go 5 years in May. I think it is. But that group in itself, our ranking structure is basically from the moment you go VVA 3 is because you officially have come in and are now actually taking on the moderator duties. You're having conversations, you're answering questions, you're approving posts. There's the VVA 4, which is more of now taking more of a leadership position. You're helping out answer more questions, providing more of a guidance for the others in the squad.
Right.
And then you have your VVA 5s, which is what we do, which is educate. In my case, I still run a squad. So every 8 days, we have rotation. So one of me and a co-squad leader run the team for the day. Make sure that everyone answers questions accordingly. Make sure that if there's anything that's out of norm or kind of odd, that we're addressing that before the post gets approved. We have the conversation and making sure, like, hey, these are the type of posts we got to be careful with. So all of that comes along with, again, the education piece.
Yeah.
We have to be continuously learning, continuously develop, like taking all the courses, making sure we're there.
Look, I know it's a great group. I know that you guys are helping a lot of veterans on it, which is fantastic. But let's really dig into why a VA loan is good, right? Why are VA loans the best loans on the market? Give us some reasons.
So based off of the statistics that we've been able to gather from HMDA, right? We pull HMDA data and have been able to identify the fact that when you're comparing even a conventional loan to a VA loan, they are 4% more likely to approve.
Okay.
Right? They are actually have a lower default rate. They have a lower foreclosure rate than conventional or FHA. It's literally conventional with the highest, FHA, and then VA with the lowest in potential defaults.
And what about guidelines? Talk to us about those.
Guidelines are more of a like, hey, this is what you're able to do, but we can branch out even further, right? Like it's an open-ended response typically for most of the guidelines for VA versus conventional and FHA tell you can't. Anything from here, can't. Anything from there, can't. Whereas VA will basically leave the door open and it allows you to really have that freedom to maneuver around that and really have that flexibility being like, okay, look, let's make it make sense. Because and that's what the VA wants. They want veterans in homes. So as long as it makes sense and it's feasible for the veteran to be able to get into a home, let's make it happen.
Are there down payment requirements?
None.
Zero down.
Zero down. Unless you're tapping into your subsequent use and you've already exceeded your entitlement, then at that point, if there's if, let's say you want to buy a $500,000 house, but all you have entitlement for is $400,000, then you got to come in with 25%.
Got it.
So
can you own more than one home as a veteran?
Multiple. You can own as many as you can fit inside of your entitlement.
And are there mortgage insurance requirements?
None. There's a funding fee, but that's only if you're active duty or if you are not a Purple Heart recipient or unless you have a VA disability rating.
And talk to us about the disability rankings. So if you have a disability, a partial disability or full disability, what does that mean for your funding fee?
So it gets waived. So it's a full-on exemption of the funding fee. There's a misunderstanding out there where it's like, oh, it's a 10%, just because everyone throws out the 10% as the minimum requirement for VA disability, but it's not. It's actually, there is none. It's no percentage at all. As long as you are deemed to have a disability due to the VA, due to your service, then at that point in time, you're entitled to that benefit. So you are exempt at that point, and it goes on your certificate of eligibility. And for all veterans that receive this rating, right, as long as they're receiving a rating, they're going to get some sort of stipend for their disability. So we get to use that and gross it up in order to help them qualify.
Gross it up, you mean you don't have to reduce it based on paying taxes on that.
Correct.
It's non-taxable income.
Correct.
Yeah. And so, okay, if you're talking to somebody who served, so they're a veteran, or maybe they're even active duty, and they haven't used their entitlement yet. They haven't, maybe they bought a house and they did it with a different type of loan, or they haven't bought a home yet. What do you recommend? How do they get started?
I'd say if you're considering joining the Amerifund team, it's a really good idea.
We as processors at Amerifund Home Loans support the loan officers in every aspect of the loan once it comes into processing because we want them out there marketing themselves and originating more loans and supporting more borrowers.
Competitive commission plans are a given, and powerful technology is expected, but what truly sets us apart is our culture. We've built a solid support system for our loan officers. If you're interested in joining the Amerifund team, go to amerifund.com/careers.
So this is the tough part because a lot of times people tell them just go to a realtor and find a house first and then go, have them like signal you to whoever they recommend. The problem is there's so many people out there that claim to be experts or claim to be knowledgeable about VA and honestly botch it so badly. And which is why you have these misconceptions, these misunderstandings in VA amongst the real estate community, and where essentially people are stumbling across a VA loan when it should have been a rather smooth transaction. A lot of times you get people still now thinking that there's caps on the VA loan, that you have people that are misunderstanding the fact that you can use the disability pay, or they're still in service. And after they get out of the service, they can't use their benefits. So a lot of these things is that education piece comes into now, okay, when we have a conversation, it's like, look, here's where we are. This is what your benefit allows you to do. Now let's go over, what your income is. So when people first come to me, the first thing I want to do is make sure they're educated on their benefit, right? That is the number one thing. The more educated you are about your benefit, the less likely you are going to get taken advantage of by somebody else.
Sure.
If you don't use me, totally good. Just please take what I taught you and take it with you.
So the best place for somebody to start to check into getting a VA loan is with a loan broker.
Absolutely.
And somebody hopefully that specializes in VA loans. How do you know if your loan officer specializes in VA loans?
There's a few questions I typically tell people to ask, and it's asking them questions about the funding fee. Is that for everybody? Does everybody get hit with that? How many loans have you closed in VA this year? Right, just this year. I don't care how many you've done in history, because that could have been 10 years ago. How many have you done last year? What is your success rate on those VA loans? And essentially, I try to make sure that people understand, okay, what do they know about the MPRs, the minimum property requirements, right? Because the minimum property requirements can sometimes be the one thing that gets overlooked. Realtors don't know it, and you have to explain it to them sometimes because some of them don't. They don't deal with VA all the time. So you have to go into those details.
So let's talk about that. What are the MPRs, as you put it?
So essentially anything that's safe and sanitary, right? So broken windows, lifted floorboards, carpet that's already pulled away from the studs, right, where you have exposed nails, things of that sort. Those are all things that the VA will require to be repaired. Handrails for something that's got more than 3 steps. If you don't have a handrail for stairs going upstairs or downstairs, that's gonna need some handle. Those are like the type of things that you typically see come up, but unfortunately, those that don't have the experience get overlooked and think, oh, yeah, well, they can repair that after they close.
Yeah.
Well, it's like, sorry, no. It's something that has to get done now. One of my clients now, it's literally the circumstance. It's got broken windows, no heating in the top floor of the 3rd floor of the home, and they have no handrail. And it's like, well, guys, it's a 3-story house, and the top floor doesn't have a handrail, and it has no heat. I'm like, those are must fixes. Broken windows, guess what? You can either have rodents come in the house, you can have cold just precipitate and moisture get into the home, which then could cause mold. So all of that is safety and sanitary reasons, right? That you need to have for the home. That's what the VA is there to protect, is for the veteran to have protection that the home that they're moving into is free of any hazard. And those are the safety and sanitary reasons why you have to have those minimum property requirements met before you even move into the home.
Got it. And then, there is this misperception from real estate agents or sellers that, it may be more difficult for somebody to get a loan with, using VA financing. And so they may not opt to choose that offer over another offer When the reality is it's not the case. A lot of times it's way easier, as you mentioned before, that there are exceptions to every guideline. And the difference when an underwriter is looking at a VA loan over some other type of loan, like a conventional loan, is they're trying to find ways to give the loan. So in actuality, it's a little bit easier.
Yeah.
What about closing costs, though? So are there certain closing costs that the veteran is not allowed to pay?
So there was up until recently, right? Which due to the NAR settlement and all that, like there's certain fees that are customary for the area that are now allowed for these veterans to now pay, which is sometimes the transaction coordinator fee, if there's like a document, like I don't know, like a document protection fee or whatever, like where they're storing their documents for the next 7 years or whatever. Those are the type of documents the type of fees that you'll see that are getting hit more with nowadays. But before was not allowed.
They weren't allowed to, but
right,
now.
Correct. But now because of the NAR settlement and as long as it's customary for the area, then those are deemed acceptable.
So there's no such thing as non-allowable closing costs anymore?
There are, but they're very few and far in between. It's more, again, it's all about what's customary for the area.
Got it.
One of the biggest misconceptions that people thought that a veteran can't pay for the termite.
Yeah.
Well, that's wrong too. Like termite is allowed to be paid by the veteran if they want to pay for the inspection or they want to pay for the repairs. That's acceptable. I tell everyone, it's just keep it to a minimum because obviously when it becomes excessive, it's going to make the veteran walk away.
Right.
Right. But two, what veteran wants to walk into a home that's being eaten alive by termites? Let's be honest. So at the end of the day, I think we have to do what's right for the consumer. And if in this case it's a veteran consumer, we want to make sure that they're taken care of. Why? Because they are the same people that are out there serving to make sure we have our liberties.
That's
right.
right.
So at the end of the day, there has to be that level of respect and integrity in what you're doing in order to serve them.
All right. Now, Jerry, people may have heard this term, but I want you to explain, what is a VA no-no?
My advice for someone selling their home: number 1, do it yourself and save. Number 2, use HomePie.
HomePie makes it easy to buy or sell without an agent. I can list a home in minutes and start receiving offers right away from buyers.
When we discovered that we didn't have to lose $40,000 in agent commission just to upsize to a larger home, it was an obvious choice.
List your home for free at homepie.com. Keep your piece of the pie.
A VA no-no is basically no income, no asset, basically no verifications of any sort, which in all honesty, it's known as the VA ERL, right? It's the interest rate reduction refinance loan. So when we go through an ERL, right, it's IRRRL, when we go through an ERL, there's no verification of the income. There's no verification of employment. Some investors may have overlays and may require that, but for the most part, there's none of that. No appraisal. There's no closing costs that you get to pay out of pocket typically, right? And I think that's the biggest thing for many is like they think, well, it's because there's no closing costs. Well, no, there are closing costs. Don't get it wrong. Don't get it twisted there. There is closing costs. They're just all being built into the loan. So that way you, as the veteran, are not having to come out of pocket for those expenses. Because at the end of the day, the whole purpose of this refinance is to simplify and ease you into the next one, which in this case also helps in deferring to payments, right? And so it gives the veteran that opportunity to really kind of get their feet settled anytime they do those loans.
Yeah, that is something that probably isn't widely spoken about enough, and that is when you do have a VA loan, you get this opportunity to do a streamlined refinance, and you can't do that on a conventional loan.
Correct.
In the streamlined refinance, you're already making the mortgage payment, and so you're already assumed to have qualified, and you don't have to go through all the qualifying factors again. In fact, you're not even required to have an appraisal.
Right.
And so it really is about reducing the interest rate, reducing your payment. And that is one of the giant benefits of a VA loan that we need to talk about a little bit more, and people need to know up front. Because how many times have you spoken to a VA borrower who was told they had to refinance into a conventional loan and didn't know anything about this streamlined refinance when they should have been educated on that when they bought the property?
Yeah. So anytime, I'm just speak for myself, right? Anytime I am initially having a conversation with a veteran, the first thing I let them know is the benefit of the IRRRL and why they want to use their VA loan in the first place. Because like you said, it's already presumed that they qualify because they already qualified for the home in the first place. So now the only objective is to make sure that we can lower the interest rate so that way they can save more money. What are the limitations? You have to save at minimum 0.5% of the interest rate has to come down, as well as the monthly recoupment, or so the total cost has to be divided by the savings and determine, is it going to meet the 36 months. I like to keep it as close as I can into the lower double digits, right? If I can keep it under 24 months, under 12 months, that's ideal.
Yeah.
But for a veteran, sometimes that extra $200, $300, $400 makes a massive difference, right? And when you don't have to do anything, come out of pocket for another appraisal or anything of that, like that makes a world of difference. At the end of the day, that is going to save them and save them money, save them time, save them energy, save them frustration.
That's right.
And so with a conventional loan, you don't have that. You're literally going to have to pay for new appraisals. You have to run all your docs again. You're going to have to provide your income, your assets, and make sure that you qualify for that refinance.
Yeah, that's right.
And so at the end of the day, it's like that is the one benefit that the VA offers you that is easy, as easy can be.
It really is. And you can do it multiple times. That's the beauty about it. So if you're in an environment, which hopefully we're heading into, where interest rates are coming down, you could take advantage of the streamlined refinance now, and then in 6 months or a year later, if they're lower again, you just do it again. And it's a really great benefit. So with all that, obviously you have acquired a ton of knowledge on VA loans. You're helping out loan officers at Amerifund on their questions with the ICU, responding to messages with questions about VA loans. You've also picked up mentoring. And so I know you've done it in the past, and obviously you're doing it again, and you're helping people out, and you're helping out loan officers that may not be as knowledgeable, and you're partnering on loans with them. So tell us a little bit about why you do that here at Amerifund. Like, tell us a little bit about that process.
So I've always been a coach, right? From when I was working at the bank, like I always took on coaching kids, and I love seeing the development. I love seeing them come in green as green can be, and you kind of teaching them the little nuances, the ones and twos, right? And essentially watching them develop into really great athletes. Well, the same goes when we're working. We can see sometimes people with a good heart, right? Like they can really be the ones that you develop into being some of the best servants out there.
Yeah.
And especially if they've already served, right? So for me, like I love mentoring people. I love taking those, especially those that have already served, because they understand the one thing that I will never, because I never served, which is you've walked in their boots.
Yep.
Right? You've gone and seen battle in certain cases. You've gone through all these experiences that I will never, right? And so for me, it's going to be one of those things where it's like, hey, I will give you my knowledge, my expertise, my ability to relay the information so that way you can be successful. I don't care if they're going to be competition. I don't care if they're competition later. At the end of the day, it's you being able to help another veteran that I may not be able to reach.
That's right.
But hey, I mean, hell, if we're going head to head, I'm sorry, I'm gonna do my best to win that client, right? But at the end of the day, it's still when you've talked to somebody and they are willing and able to learn and develop the skills and actually care enough to develop that sense of servitude to others. To me, that's the best. Like I get so much joy in just watching the development and watching them succeed. Their success is my success, period.
Well, I'll tell you what, I can't wait to see your future success and the way you're developing. Like I said, you've had a huge impact on all of us here at Amerifund and the loan officers that have decided to partner with you. If there's a loan officer out there that might be a little bit newer, or maybe they've been in it for a while, but they just never learned the right way, and they're considering making a change, can they reach out to you?
Absolutely.
How
I'm
can
always
they
an
reach
open
you?
book. They can call me, text me, Facebook me, Instagram, TikTok. You find me, I'm there. Like, I'm literally on my phone all day. So anyone who ever reaches out in any which way, any platform, any phone call, text message, it doesn't matter. I'm going to respond. So, people can easily pull up my Facebook profile. I have everything listed. So feel free, guys.
Well, I can attest to that. You're very responsive, and it doesn't matter day or night, weekend, holiday. It doesn't matter. So listen, Jerry, the future is bright here for you. We're super happy to have you, and thanks for coming in and spending some time with me today.
No, yeah, I was excited. I was like looking forward to this. I was like, hey, you know what? I need to make time for that. And then I heard that you were gonna cut it short at the end of the month because you take your time off.
I've got some time.
I was like, you know what? No, I got to get in there before the year's over.
I'm so glad you did. It's awesome. Well, listen, guys, again, if you want to reach Jerry, if you're thinking about making a move, if you just want to know more about VA loans, if you're a borrower, if you're a veteran, if you're thinking about buying your first home, or maybe it's your second or third home and you didn't know you could reuse your VA benefits, reach out to my man Jerry here. You can find him on the Amerifund website. Like he said, you could find him anywhere online, and he is extremely responsive. And until next time, we'll see you on the Blueprint.